So how do you see the business momentum, with respect to deposit and advances for the sector as a whole? With the liquidity that has come in, do you see the momentum gaining traction?
So, Abhishek, clearly there's been an easing of liquidity, which is a good thing from our perspective. Private sector demand has still been kind of muted. But we at Kotak have grown average loans at about 18%, kept good pace with deposits. And it's always been our mantra that we will try and go our deposits somewhere between 1.5 to 2 times nominal GDP growth. And we're continuing down that path.
So do you expect the loan growth in FY26 to be around the 15% mark?
So it's difficult to say that. What we said, the way I kind of like to temper it is it within that 1.5 to 2 times GDP growth? That is really a risk appetite statement, right? Because if the economy is going at a certain rate and you're growing too fast, then obviously you're taking too much risk. If you're going too slow, you're losing money on the table. So what we like to do is kind of say, hey, if the economy is growing this way, are we growing in that kind of ballpark?
Well, recently many banks have started to cut their saving deposit rates. Also the fact that net interest margin has been healthy for all the banks. How do you see the net interest margin trajectory in a declining rate scenario?
So Abhishek, obviously when repo rates get cut, that puts pressure. Some amount of that pressure is offset by cuts in rates, not only savings, but also in terms of TDs. Of course, TDs take a little bit more time. It's a matter of, fine balancing as to how much you can cut, the speed at which you cut, where you cut, and how you do it. Obviously, NIM management is a very, very important thing for the profitability of a bank.
Any guidance on net interest margin?
So it's hard to, because it depends on how the repo rates kind of move, how often, how many more cuts there are, and what is the quantum of cut. Depending on that, we'll have to respond accordingly.
Well, FY25 for the banking sector as a whole has seen pain in the unsecured portfolio, microfinance or credit cards or personal loans for many of them. How do you see the trajectory with respect to, asset quality panning out for you going ahead?
Yeah, so you're absolutely right. There's been a lot of pain, particularly in microfinance. We've seen a lot of pain. And in microfinance, while I think the industry as well as Kotak has shrunk the book quite dramatically, we brought our book down by about 33% on an average basis year on year. Just on a smaller book, the pain will kind of reduce. But I think it'll take a little bit of time, maybe Q1, Q2, before we start seeing that pain kind of come down. Credit cards, I think, have plateaued and I think will get better. Personal loans are kind of really back down to a very acceptable level of loss rates.
Well, your credit cost for FY25 was around 60 basis point versus 40 basis point in the previous fiscal. How do you see credit cost in FY26?
So, Abhishek, based on the existing book, I think we'll see a better trend. And you can see it in our slippage numbers, right? For the last 2 quarters, our slippage numbers are coming down, which is a clear indication that losses will kind of come down as well. There are other stuff in the horizon, which we'll see how it plays out. But generally, I'm cautiously optimistic that credit costs will be better.
Any upgrade or more details on the digital front that you're planning for the bank?
Oh, definitely. As you know, Abhishek, we've launched a new app for Kotak Bank. We've launched a new app for our 811 customers. We've done a new platform for payments for our corporate customers. So a lot of stuff happening on digital. And that is something which I think we're going to drive really, really hard. Better digital capabilities for our customers and better digital capabilities for our colleagues. That's the thing that we're really going to drive, because that's what I believe is how we're going to win.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.